Good morning, everybody. It's Trent Klarenbach with Klarenbach Research. Today is June the 19th, 2024, and today we are going to look at oil prices, light crude oil futures. And the first chart we'll look at is the weekly chart of the nearby contract here as presented on TradingView. You can see here now oil's trading at $81, which is really the same price as traded at way back in September of 2022, which means really the price of oil has really done nothing in that period of time outside of some powerful swings and fluctuations, but it's still trading at the same level it was back then. You'll notice this chart here has some Fibonacci levels on here. What I did is I went from the March 22 high back here and took the April 2020 low. Remember that day of negativity in the oil market, and I drew the Fibonacci lines from those two high and low points, and we can see here how after reaching the high it pulled back, and through 2023 and late 2022 the price of oil has actually traded in between the 23.6 and the 38.2 retracement levels, which is, I find it always fascinating. So why does it do that? It's a wonder of nature, and it's a mystery of the stock market, I suppose. But yeah, take a look at that. It's really done nothing in the last almost 2 years now. Interestingly enough, the price is now trading back above the 50-week moving average, and it found support here at the 200-week moving average. So the moving averages, they're certainly levels of interest to keep your eye on, because why is that? A lot of people have their eyes on these moving averages, and some people have their entry levels at those levels, and also their exits might be at the moving averages depending on the direction of the trend. The blue line here is the average, is the anchored volume weighted average price, the average price paid per oil contract since April 20th, 2020. So you can see that has actually acted as a level of support, bringing in buyers, keeping their positions alive and healthy. So right now the average contract holder is in the green. Average price paid per contract is in the green, and the average buyer is feeling good about their position. I drew a trend line here from the top of the candles bodies. There's no real art or science. Maybe there's an art, but there's no real science to drawing trend lines, and really they should be drawn, as said, with a crayon and not with a pencil. So what that means is you really want a wide trend line. So maybe you could actually tie in the top of the candle bodies. Maybe you want to do something like this and draw in the trend line matching the top of the candle wicks. You can do that too to give you a good idea of how to draw a trend line. It doesn't really matter, but it's something to be aware of. So yeah, oil here has got some work to do. Our next level of interest, if we break above this trend line, of course, is the $90 range. And then, of course, we just hidden areas of resistance and adding them to our list of levels of interest. The daily chart, it has quite a rally here in the last week, and it's back above the purple 200-day and the green 50-day moving averages. Both of those are declining, so I wouldn't get too excited at this point here. I actually believe that today could represent a local high, and we'll see a pullback for 1 to 4 days after today, starting tomorrow. So we'll see if that actually happens. Stay tuned. My name is Trent Klarenbach. I'm with Klarenbach Research. It is overcast in Saskatoon. I had a barbecue last night. Life's good.